Hi, Greg Lewis, MetaStock Software. In just a moment, you're going to see recordings from our 2016 Traders Online Summit. I know you're going to enjoy them. As a major sponsor of the presentation, I'm pleased to tell you that you can get an extended trial of MetaStock by visiting metastock.com/traders-summit 3-for-1. Or, to make it easier, just click one of the links provided. Thank you, and I hope you enjoy the presentation.
I do want to, we do have a sponsor today, Technical Analysis of Stocks and Commodities. Great magazine, by the way. When you registered, you had an option to get a free copy. This is a magazine I absolutely have subscribed to for the last 20 years. And they're a great sponsor of ours as well. Really appreciate the work that they do. Coming to an event like the event that we have today is a little bit a great way to increase your education. I think it's important. I think in life we're either moving in the right direction and learning the right things, or we're not. And so to have something around technical analysis that's delivered to you on a monthly basis is great. So, in any case, we're going to get to our first speaker. Rick Sadler is going to join us. Rick is a friend of mine. This is actually the very first time he's done a webinar with us, and he does a lot of stuff. The company that he runs is called Hit and Run Candlesticks, and a very nice guy, a little bit of a guitar player, which is something that we like, that I like personally. But Rick, let's go ahead and bring you on here.
Hey, good morning, Jeff. How are you?
Good. How are you?
I'm doing great, thank you.
Let's go ahead and I think we've had our one technical issue of the day. My fault. Again.
Hey, by the way, I talked to everybody here, and we do all forgive you.
Okay, good. No, but I feel bad. Like, I had a guy that was in California that woke up at 5 a.m. so he could go, right? That's terrible. I'm sorry, guys. Anyway, let's go ahead and get underway. What do you want to, I just gave you the permission. It should give you an option to share your screen with us.
There we go. I just had to figure out what screen I'm looking at.
Now, I kind of introduced you a little bit. Is there a few things you'd like to tell us about you? And I'm just going to get out of your way because we want to stay on schedule this morning. But I'll let you go. Go for it.
All right. Thank you very much, Jeff. Hey, I want to thank everybody for being here. More importantly, I want to thank Jeff and MetaStock for inviting me here. I do appreciate that. We are swing traders, mostly swing traders. With here at Hit and Run Candlesticks, we also have an options side of the company called Right Way Options. We run a trading room. There's a couple of day traders in there, but like I said, predominantly swing traders. So I'm just going to get this kicked off. We have about 45, 50 minutes or so to speak, and I want to get looking at a few charts maybe. Again, this is Rick Sadler. I'm the founder of Hit and Run Candlesticks, and what I would like to share with you today is, without a doubt, I've said this many times at other webinars, this chart pattern that I'm going to show you, and I'm going to do everything I can to teach it to you today. Please understand that 1 hour's time, that's kind of hard. But I will share as much as I possibly can. I will also answer as many questions that I can. And we call it the rounded bottom breakout. We call it it's the RBB for short. Quick little disclosure here: there's a high degree of risk involved with trading equities. Look, trading is risky. In fact, anything you can make really good money in, you'll find is risky. If you want a real passive job, something that's not risky, you're probably not going to make a lot of money. With trading, you can make a lot of money, but you can also lose it. So it's very important that you check, double check, triple check your trade. Never overtrade with too much money. Never bet your last penny on a trade either. So please be careful with that. All right, couple things I want to start off with. Again, this is the rounded bottom breakout. We call it RBB for short. And I want to start off with a couple of things that you're going to need. What you're going to need is to be able to look at a chart and see chart patterns. We do this, we teach this by training your eyes. You've got to go out there, you look at a chart, you can see that chart pattern. You can see bullish engulfs, morning star signals. You can see flags, pennants, things like that, tops. You know, just you've got to be able to spot those things. And it doesn't take long to learn how to do that. It really, really doesn't, because there's not that many chart patterns out there that you need to learn, or candlestick signals. Moving averages. For this chart pattern, for this strategy, you will need moving averages. I will go into detail of what they are. You're going to need a knowledge of chart patterns, which I kind of talked about that right there. Chart patterns such as head and shoulders, inverse head and shoulders, cup and handle, those sort of things. And you're going to need a knowledge of price patterns. Now, price patterns is basically price action. I use candlesticks for that. I think candlesticks is one of the greatest things that ever came around because it can help you. It helps you to know what everybody around you is doing at that time, or what their attitude is. Candlesticks, they are a vote, whether we're going up or down, and you can see that happen. You can see the vote take place, and the candlesticks is a picture of everyone's attitude on that chart at that time. Planning your trade. You know, everybody has heard this so many times. This is one of these buzzwords. Plan your trade and trade your plan. That's really, really a nice buzzword. The thing about it is I find so many people don't know how to plan a chart. We're going to touch on that just for a second. The RBB, one reason that it makes it, that it's so successful, and it is a highly, highly successful chart pattern, is that it has rules. See, that's one of the things that traders run into is they'll go into a trade and they really don't have a set of rules. With this, they're right there. If you take the time to learn about the RBB, there are a absolute set of rules that come with it, and I follow those 99%. You know, there's always that little okay, I'll bend the rule here, but I would say for this chart pattern I follow 99%. Know what's needed to meet your trading goal. Plan your trade and trade your plan. Know what's needed to meet your trading goal. I don't know how many people have a trading goal. I'd say almost everybody with hit and run candlesticks does, because we pretty much talk about that quite a bit. Don't enter a trade until you have a full plan. Very important. All right. Let's kick this off. Now, this is a trade that I recently did. Many people in the trading room recently did as well. So we're going to go look at TZA. So here you are. It starts out like this. I find a chart that's ready to swing. It has enough conditions to make a reason to buy. Now, what I do is before I have a reason to buy, I've got to have multiple conditions. So, and conditions are not reasons to buy. So what I want to do is I want to have enough conditions to make a reason so I can buy. Here are some of my conditions. Is the chart trending? What's the price pattern doing? Is there high probability in the overall chart? How about the profit projection? This is a big one, and we're going to talk a little bit about this one right here later today. Support and resistance, price action. These are some of the things that not all, but some of the things I look for before making any trade whatsoever. And it doesn't have to have, You know, I don't have to be able to put a check mark next to each and every single one of these. But what I do need to be able to do is is um, is to have enough of these conditions put together so that uh, so that I can have that reason to buy. All right, let's go. Let's get it. Let's buy it. Oops. There we go. Oh, wait. I didn't make a plan. I did not make a plan. You know, if we take this back, I see this chart right here. It looks great to me, but we did not make that plan. So let's come over here and let's make the plan. Now this is my trade plan for TZA. My entry's at $28.22. I'm buying 400 shares. My first target is, you know, this is a program, so you have to plug in the number. Do I live with 0.40? No. Might I, you know, sell this at 31.38 or something like that? Absolutely. Might I go a little bit higher? Absolutely. But I have a plan. So what I'm going to do is I'm going to look for 31.40 for a target. I'm going to sell 200 shares. I'm going to profit about 11.20%. My next target, I'm going to look at 33.05 for a target. I'm going to sell the remaining 200 shares, sell that for about 17%. My total trade is going to be about 14.10% or so. I'm going to make about almost $1,600 based on this trade. I'm going to put a stop loss at $27.70. I'm going to risk just under 2% or just over $200 on the trade. I know this trade inside out. I know what I'm going to do. I don't get into the trade and then make my plan from there. I make the plan, then I get in the trade, because I want to make sure everything's right before the emotions set in. As hard as you try, you cannot eliminate all the emotions in trading. And that's one of the key things. You've got to eliminate the emotions. So I put my plan together, and there we go. Okay, let's talk about tips to a swing trade. Sell into strength. Always sell into strength. Remember what a swing is. It's just a swing up like this. That's all. That's all. You're not looking to buy the chart and have it go up for the next 90 days. That's not a swing. Swing is just a nice short-term swing. Overnight to, I don't know, 15 days, give or take, maybe 10 days, give or take. Be profit realistic. What I mean by that is, you know, if you're in a swing trade and you're looking for 110%, your dots are not connecting. That's just not realistic. But if you're in a swing trade and you're looking for 10, 15, 20%, 30%, that's realistic. Yeah, that is realistic. Know the total profit potential of a chart. That's kind of like knowing that the distance from the leg on this swing to the top of the swing. Know what that distance is. If you don't know what that distance is, you've not done your homework on the trade. Because if you enter a trade thinking you're going to make 20%, but the distance from here to here, so from support to resistance, is only 5%, what do you think your chances are of getting that 20%? Might not be so good. So make sure that you've got a clear path, a runway to that 20%. It's okay to have some minor resistance, but you really have to know where that resistance is. Again, don't enter the trade until you have a plan. You need to know where your targets are, projection, stop, entry. Your plan is probably the most important thing out there. I know a lot of people, a lot of traders, especially new traders and traders that are struggling. They seem to think that the most important thing there is the almighty scan. You know, oh, give me that scan. The scan is not the most important thing. It really is not. In fact, it's probably one of the last things on the list. the most important thing is your plan. Without the plan, you got nothing. You know, I have this, if you need more real estate, I run into traders that they trade with a laptop and that's all they have is one screen. You know, you need to be able to put your plan on one screen. You need to be able to put your chart on another screen, and maybe a few other things. Look, if we want to be real traders, you need multiple screens. It's just a fact of life. It makes life easier, and you'll be able to see more. Just buy it. They're cheap. Not having a plan is like being lost in the dark, and that's just uncool. All right, let's talk about the swing trade, the RBB swing trade strategy. And before we get going, I want to cover this because I know this is something that everybody wants to know. So let's just cover this early. On the chart, you will need what we call the T-line. This was a something I created years ago. I did not create the 8 exponential moving average. Years ago, I created what we call the T-line, and it has become a mainstay for many traders. There's many other educators that even have taken it on and use it. And again, it's just the 8 exponential moving average. You'll see on my charts it's black, but this is a black screen, so I had to color this white. The 34 EMA, you'll see that on my charts. You'll see the 50-day simple moving average on my chart, and you'll see the 200 simple moving average. These are the correct colors. You'll also see the 200 front-weighted measured on the low. I probably should eliminate that right there. 200 front-weighted measured on the low. That's all we need to know. This thing is a money maker, and I'm going to show you what it is, and it works very, very well in many, many situations, but it really works well for this chart pattern right here. And you'll see volume bars on my chart. That's what you'll see. That's it. You're not going to see much of anything else. I don't trade with a lot of indicators. We are pretty much stuck on price action, support and resistance, chart patterns, candlestick signals, not necessarily in that order. Just we're pretty much stuck on that sort of thing. All right, let's take a look at this chart with the moving averages up there. Again, the T-line, that's the black line. That's right here. The 34 EMA, that's right here. The 50-day simple, it's right here in blue. The 200 SMA is this line right here. That's the 200 simple moving average. The 200 front-weighted measured on the low, that's the little dotted. I call that the dotted deuce. I'll call the 200 a deuce a lot. 2 deuce, 200. So we call that the dotted deuce right there. And then volume bars are down here on the bottom. All right, I want to look at a trade here, on this trade, a couple things I want to talk about in the chart here. Excuse me. Let me start over. Let me start right here. Well, no. Let me start over here. I apologize. For the rounded bottom breakout, what you need to see is a chart that's downtrending. Pretty simple to find. Just get a dark chart that's downtrending. And what you want to look for is below the 200-day moving average, always. Always. This chart pattern has to be under the 200 simple. And it has to be traveling down. And one way to do that is you should have like the 34 EMA below the 50. The 20 simple works well too. You need it tracking below the 50-day simple moving average. And then what you want to see is the chart starting to bottom like this. You want it to see it bottom out. And then you want to see price start to curl up over the 50-day simple moving average. That's the trigger that makes it the rounded bottom breakout right there. From that point, we're looking for the 200 simple moving average as the target direction. Not necessary, it doesn't necessarily get there, although it does more times than not over time. But that is the target direction. We're going to make money from here to here. That's the idea, from the 50 to here. So one of the rules we have in place is there must be at least 10% between the 50-day simple and the 200-day simple moving average. At least 10%. I mean, you could make 50% in there if you want. What you're going to have is more of a playground to make money. This little dotted deuce, that's our 200 front-weighted moving average. And that's one of the major targets. That's one of the major areas that we look to take our first part of the trade off the table. Maybe a third, maybe a quarter, maybe a half, whatever works for you. But that's where I would take a partial off the table. Now, as we look at this, the chart starts making a bottom. I like to see a nice little bottom here. I don't like to see like big corrections right away. I like this type of chart. Nice little bottom in here. I want to stop and talk about this for a second because we do use support and resistance. And one thing about support and resistance that I find is there's an awful lot of traders that they like to draw lines at the very tops of everything. That's not resistance, folks. Look, successful traders know this already. Traders that are starting out or traders that are struggling, this could be very helpful to you. The top is not where you put your resistance line. You want to put your resistance line slightly below. And the reason is, you see how this chart, we're down, we rallied up very strong, we consolidated very well, and we broke out and then came right back down. There's no juice in these candles here. There's no real buyers here. This was like the group of big buyers sent out a scout. The scout we can lose. You know, this is not a general out here. The generals are back here. The generals are sitting in here. Oh, let's send that scout out and see what happens. Well, it just got an arrow in its back. So where is support? Support is not right here. If that was support, it would have supported. Support is back down below. So here we come up again, and you know, these scouts will never learn. You know, they need to stop volunteering to reach out there and test the waters. Look how it came back. So this is where the support area is. And we fell through support here. Now, as we start moving up, we did it again. When it starts to break out on a good buy signal, good candle buy signal, okay, it stayed up there. Now what you want to do is look to buy the pullback. We look to buy this pullback, and this trade here has 20% from this area, whether you bought it right here or right here. You're looking at about a 20% trade up into this area. So if you have a 20% playground, we call this the playground. If you have 20%, I'm not suggesting you're going to make your 20%, but I would venture to bet that, look, I think there's about 500 or so people in the room here. I'll bet you 499 would love to make 10, 12% on a regular basis. And that's what we're looking to do. We're looking to make that 10, 12% on a regular basis. And we're splitting our trades up. So we get our first portion of our trade, we take that to safety. Because now if something happened drastic, and we all know that can happen, then what's going to happen is at least we have that first half, and what that usually does is it meets our long-term goal. Like you know, how about increasing your portfolio, say, I don't know, 20, 25% in 9 months, something like that. That's what that covers. All the rest is gravy. So we pull back again. So if you took this trade in this area here, this is probably, I don't know, 10, 12, 15% trade, and we came right up to our dotted deuce. And look how the wick came up there and stopped. It stopped right in here. Support and resistance is nothing more than a battleground for the bulls and bears to fight over who's going to win. Now, everything we're talking about today is bullish, so we'll just keep everything that way. Consolidation is nothing but a battleground for the buyers and sellers to decide who's going to win. And if the trader that comes out the top side, that's the winner. That would be the bull. That's who you want to trade with. So that's like this right here. It came out see, all this is just battle. That's all this is battle. Bulls and bears are battling in here. And then, boom, the bulls came out the winner. Now, from here, we know that this is the direction it's headed. So we want to trade in that direction, trade the swings, because we're swing traders. You know, we follow chart patterns, candlestick signals, things like that to tell us when to get in, maybe when to take profits, and that's how that trade might work. On this pullback here, an entry here would have given you about 16%. And look what the stock continued to do. Now this, after it does this, it's no longer a rounded bottom breakout. I'm not here to talk about that. I'm here to talk about the distance between here and here, the trade between here and right here. By the way, let's see, do I have, make sure I have any questions. I don't think I see any. Again, I'm not opposed to answering questions at all, so I don't mind that at all. Alrighty, the setup. The rounded bottom breakout pattern, it's easy to find, it's easy to scan, it's easy to see with your eyes. It really, really is. Just a tiny bit of education, you can spot them instantly. Can I make the chart? I cannot. It's as big as I can make it, Rail. Here's something to look for. You want to look for a bearish downtrend. Say the 20, 34, tracking below the 200 simple. You want to see price turn up over the 50-day simple moving average. When the trade begins, use candlestick signals and chart patterns such as continuation patterns. I love continuation patterns. You know, in the entire stock market, and we all do this, and I'm one of the world's worst. You know, you have all these names for these different chart patterns. Wedges, flags, pennants, ascending triangles, cup and handles, things like that. Once you know how to recognize what a cup and handle is, or an ascending triangle, or a symmetrical triangle, things like that, once you can recognize that, forget it. Don't beat yourself up with that's the only thing there is. Now what you need to do is you need to realize what they are. All of them. They're the exact same thing. They're continuation patterns. All chart patterns are continuation patterns. Every single one of them. There's not a chart pattern out there that's not a continuation pattern. Now, there's bullish continuation patterns and there's bearish. So you know, keep that in mind. So once, and it's like candlestick signals. Once you learn candlestick signals, now dive into it and really learn what they mean. Now, we don't have time to go in that today. That's not what my big focus is today, but that's something we focus on a lot at Hit and Run Candlesticks. Here's a trade. This is LC. Now, this is a trade LC. Oh, wait a minute. Question here. How do you set up? That's something MetaStock will be able to help you with. I'm on a PowerPoint, and I can't do that right now, but I'm sure the folks at MetaStock. And in fact, I'll tell you what, if you email me at rick@ricksadler.com, rick@ricksadler.com, I promise you I will get you the code for that and get you instructions how to do that with MetaStock. You can go to our website. There's a contact us. Click on that, and I'll be more than happy to do that for you. Let's see. Let's see. Does the RBB work other way up in a bearish market? Yes, it does. I mean, if you have a bearish market, then you've got 80% of the stocks moving down. Is there going to be bullish stocks? Absolutely. Does it work? Absolutely. Is it as fruitful? No, but that's true with anything. I mean, if you're a diehard bull in a market that's selling off, you're not going to be as fruitful. I don't care what you look at. So you always want to work with the direction of the overall market. That's always a plus to do that. Let's see here. Again, I can set it up for you. I just email me, and I'll be more than happy to take care of that for you. It is a reversal pattern. It's a swing trade. It's a swing trade. So reversal. What's the word reversal? What does that mean? Does that mean like a stock is what is that? $4.50? Is that going to reverse to $82? No. Does reversal mean it's reversing from what? For a swing trade. Let's be careful how we use our words there, okay? Very important that we understand that. So here's a rounded bottom breakout here. We started moving sideways. Notice how the 50-day moving average and, say, price. Notice how far apart it is. Look how close together it is now. It starts to cross over. That becomes an automatic buy right up there to our double deuce, 24% trade. The trade was taken again here, and it rallied up. I think it ended up closing out. I don't think it made it right to the 20 or 200, but a 17% trade right there. Not all charts are equal. Not all rounded bottom breakouts are equal. One of the big keys is you've got to have the distance here. You've got to have the playground there. Something about consolidation. This is one of these takeaways today. I hope you take away, because this is one of these things that successful traders know already. Struggling and new traders need to know this. This is one of these key little aha moments right here. Consolidation is not bad. I know an awful lot of traders that seem to think consolidation is bad. In other words, the chart rallies up, it starts to consolidate. Oh my gosh. No, that's not oh my gosh. That's all right. That's all right. All consolidation is a chart pattern. All chart patterns will give you a winner or a loser. All winners, we're talking bullish now, okay? We're going to stay on the bullish talk. So all winners that come out of consolidation are working on the next run, the next leg, the next big rally. You know, we've all heard of wave 1, wave 2, wave 3, and I'm not talking waivers out there. I'm talking run. So you have a run that goes up, it pulls back, that's wave 2, that's consolidation. Wave 3 moves up and it's long. So anytime you see the winner come out the top of consolidation or a chart pattern, that's where your bigger moves are. That's where you want to be. Now from there, we can get into chart pattern, candlestick signals and smaller candle patterns. Okay, let's get back to this trade here. This is con. This is con. And here's a rounded bottom breakout. That's a 65% trade. That was a sweet trade we made a while back. 65% trade overall. The second position, the first position was closed out at about 22%. And the reason is that was where our first target was. That was right there. Now, you see how we consolidated? That's nothing more than a chart pattern. That's a bull flag. And we broke out. That is a battle between the buyers and sellers. That's positive. That is something that is, I look at that as opportunity. That's money. So when we start doing this, all right. Now what we want to do is set your stop right in there, right at these lows, and then be a buyer on the breakout. Or you can be a buyer in the middle of the flag if you want. Here's a trade. We bought the trade. We sold half the trade. We let the second half go. It consolidated and pop it went. So we made a nice little 22%, and then we made it on the first half of the position, and then a nice little 65% on the second half of the position. Whoops, didn't mean to do that. Go back. Trade with the winners. In other words, you see a chart that breaks out, trade with that. Breakouts don't have to be, way up here in big, long trends. We do a lot of those, by the way. This is just a particular chart pattern I'm showing you here. Okay, let's see. A couple questions here. I better get to them. Why did I draw resistance where I did? I'm going to guess you're talking about this line. Or wait a minute. Where did you? I don't think I have any resistance drawn up here. I think I have more. Well, okay, you may be looking at this here. I'm using this as support on this side, and this is resistance. The reason I didn't use the tops is that's not true support. If that was support, the stock would stay there. So it moved back. It moved back. So what I want to do is I want to see where the main body is. The main body. I want to see where the main support is, not where the wannabe bulls are. These are just wannabe bulls. These are bulls up here that's got no juice. They crossed the line and they got run over by a bus. Down they go. These here, they crossed the line, they got run over by a bus. Look at them. So you want to be where safety is. And this is a common mistake I see of struggling traders. They put their support resistance lines right at the very tippy top or the very tippy bottom. And they can't figure out why nothing works. They'll get stopped out and things like that. Well, that's because you're up here where the buses are running. You're just going to get run over by the buses. So, and please keep in mind that I'm limited to time right now. I'm very, very limited. I would bend over backwards to help you, when we have some time. So please, check us out in the website. Be more than happy to spend some time with you and work through this. I can even set up a webinar for you. Just email me, I'll set it up, and we'll set up a group webinar where I cover this, and I'm not locked in to time. I have no time restraints then. Percent of time in consolidation, it doesn't matter, Richard. Percent of time doesn't matter. As long as it's consolidating and still remaining healthy, it's still a good trade. Let's see. Do you have any current chart setups? Join us in the trading room. No, not today. What time frame? I always start with the daily. I'll look at the 4 hour and 2 hour sometimes, and the 2 day and 3 day have become a big favorite. Let's see, surely support is at the bottom? Not necessarily. Not necessarily. No, support is only support if it truly holds. Nope, do not use divergence. Formula for percent of moving average. Formula. You mean how to spread them out? That's part of the formula with MetaStock. And if you get with us, we can get you that. That won't be a problem at all. Like I say, go to Hit and Run Candlesticks. There's a contact us. If you send me an email, I will get you how to set that line up with the MetaStock code. I'll get that done for you. More than happy to. So let's see. Tony's saying live examples. These are examples. These are live examples. These are trades that we have made. Let's see. Consolidation, case of longs, should be occurring after the move up. Yes. All consolidation is nothing more than continuation. Look at the consolidation pattern and you'll see a continuation pattern. And it's just by definition, continue. Continue from what? Bullish, the chart would have to be moving up. Bearish, the chart would have to be moving down. I'm going to skip some of the questions, just in lieu of time here. Please understand, I'll be more than happy to spend as much time with you as possible. I will just, all kinds of time, and we can cover this. Just send me a note, and I'll set it up so we have a group webinar that we can do this, and we'll get right with it. Let's see. For the scan, let's see some things here. Let me move on. I apologize. Like I said, we're strapped for time. Okay, here's another one. Look how we broke out of the 50-day simple moving average. We break out and we just consolidate. That's a nice little flag right there. This could have been bought right here. Nothing wrong with that. Your stop would have been down into here. From this point, from the red line here, I should have drawn that lower. From the red line, what I'm looking for support up to the 200 simple is 65%. Look right there. Just like the doctor ordered, that's a little battle between the buyers and sellers. Look how we broke out. I put support, and look at that. We never broke down and touch support. So if you're looking for a stop, that's what you want to do right in there. You don't want to necessarily set your stop so tight. You want to use support and resistance, and then you want to have your stop in there, definitely, but not necessarily tight. Rick@ricksadler.com. That's SADDLER. If you go to the website, there's a contact us right there on the homepage. That'll get it right to me. Here's the AOS trade, and here we have a nice little breakout. This is all a downtrend over here. Here we have that nice little breakout right here. We broke out. That could have been bought here. It rallied up for a pullback. There's always a test, always a test. So we come back and we test that 50-day simple moving average, and then we start rallying up. From here to here is 36% on this trade. It moves right up to our double deuce here, the front-weighted 200 moving average. It pulls right back. You wait for a buy signal. There's no buy signal here. See how we're down to that 34. We start putting in some candlestick signals that are suggesting something's happening, but we pop up, we meet resistance, we pull down, and now we break out. I would never be a buyer. I shouldn't say that. I used to do that, and I used to find that I didn't make as much money because I was too busy trying to pick a bottom. When I quit trying to pick a bottom, all of a sudden there was more money to be made. So this is something we call a tradable bottom. Is this the bottom? It's obviously the bottom, but is it a tradable bottom? This is the tradable bottom. See how we have a low, a high, a higher low, and we break out? This is the tradable bottom. Now from here, we can make great money. Look at that, 16%, 16%. Now, I know there's a trader out there that's thinking, well, geez, I could probably buy it right here. That's 16%. That's got to be, what, 3-4%? Man, I could get 20% out of that trade. I would almost bet the person that's thinking that is the person that's really not making any money overall in trading. They're what I call a struggling trader. They end up making 20 bucks a week, and that's not making money. Stop trying to catch the bottom. Stop trying to thread a camel through a needle. Stop trying to do that and trade and manage the chart. And that would work out for you. All right, I'm going to try to answer a couple of these questions. Let's see, I'm going to start with the bottom here. Some traders call a double bottom with a higher swing low. Some traders call that a double bottom with a high, yeah, and yeah, that would be a good thing to call it. Yeah, it's just a low high, higher low. You can call it a swing low. You know, I mean, you can call it whatever you want. Just know what the meaning is. That's the key. Everybody knows what the names of them are. Everybody knows what the cute little buzzwords are. But unless you know what it means, you're missing out big time. This is where the trade starts, right up there, not down here. All right, let's see. For this chart pattern, if it's below the 50, it is not called a rounded bottom breakout. Let's see, sir, is this a daily? Yes, this is a daily chart. All my trades start with a daily chart. What is the SMA blue line? It's the 50-day simple. Thanks, Jim. Appreciate it. The gold-looking line, that's the 34 EMA. Let's see, here's somebody that's been around for a little bit. Donald, how does the RB compare to the pinball? It's very different, but it's kind of similar. It's kind of similar, but it's very different. It's different sections of the chart. You know, the pinball trade is down here. This is the rounded bottom breakout trade in here, and then this is just follow through up into here. Let's see, if you know the why, then you know. That's right. That's right. TJ, thank you very much. TJ's right. If you know the why, then you know what to do. And and that's so true. There's a lot of traders that you get out there and you study, and study. Man, you know every candlestick pattern by name. You know every chart pattern by name. But you know how many times that I can put up a chart with a chart pattern or a candlestick pattern, and okay, tell me what that means. Tell me what that means. And all of a sudden there's this blank. Oh, it means it's bullish. No, not a good answer. Again, Kevin, anybody asking on how you program a moving average, or if you'll send me an email, or better yet, just go to the contact me on the website, hitandruncandlesticks.com. Ask me the questionnaire, and I'll bend over backwards to help you. We'll even set up a continued class here looking at live charts rather than a PowerPoint. I'll be more than happy to do that. Yes, you can use options. Can I short? If not on this, I cannot. No, but I can short shut up if we get together. Can you? Let's see. Well, will we receive an email link for the trading room? Well, I don't know. You can. We have a 30-day trial. If you sign up for the trial, you'll receive a link to the trading room, yes. So you can get a 30-day trial for $14 with Hit and Run Candlesticks. In that 14 trial, you are considered a full 100% member. So please, if you want to learn the rounded bottom breakout, for $14 you can't go wrong, and I won't hold anything back. I'll do everything I can to make sure you learn it. $14 also if you're interested in right way options, full complete access. We have I'm only talking about this because I don't know how many of you heard of Tina Logan. She's a featured speaker. She will be actually Monday night. She kicks off a 5-speaker, 6-webinar education program that we're doing, and for the price, this might be something really worthwhile if anyone's interested. I don't even have this on the website. You couldn't go get it if you wanted to. If you're interested, just get a hold of me and we'll get you squared away with it. Like $132 for everything on there. You can't go wrong. Talk about everything from options, support and resistance, gaps. I'll definitely be covering the rounded bottom breakout. Let's see. Let's go back to this here. Yep. There are a bunch of bonuses. Yes, there are. No, actually, I'm in Springfield, Missouri. Let's see. I was wondering if the buy signals with the green arrows were required to close above the 34. It's required to close above the 50-day simple. Yeah. The lines again? Sure. Let's go back like this. There we go. Right there. These are the colors, except for the T line. The T line is black. I'm on a black background, so I had to use white. The T line is the 8 exponential moving average, and it's black. The orange is a 34 EMA. 50-day simple moving average is blue. The 200 simple is red. And the 200 front weighted low is dotted red. Again, if you email me at rick@ricksadler.com or you go to the website, click on Contact Us, we'll help you set this up for your MetaStock. Let's see, what else do we have? Did I miss anything up here? There, we did that. Is it okay to enter a trade under? Sure. Yeah. I mean, that's the idea. The trade is from here to here. It's a revision to the mean is what it is. Now, let's see. I've got a few more minutes, and like I said early on, we only have so much time here. They're going to cut me off, and then I'm done here. But if you, I mean, I'll set up a no cost. I'll set up a no cost, zero money webinar for here. If you're using MetaStock, if you're here and you've got MetaStock, I'll set it up with you, and we will do a webinar that completely covers this 100%. But here's some things like that right here. I don't use stochastics. I don't use an oversold, any kind of oversold indicator. Now, with that said, that's exactly what we're doing right here. We're overselling the 50 compared to the 200 simple moving average. And what we're doing is we're after that snapback or that revision to the mean back up to the 200 simple. And if you spread those out, if you give them lots of room, the more room you give them, the more oversold the 50 is to the 200. And that's where you get your snapback that runs back up. And that's how you can get 20, 30, 40, 50% possible moves. They're not guaranteed, but that's how you do that. And see, that's the type of stuff I can explain if we have more time. How do I use the volume bars? I don't use volume that much. I truly don't. You see this gap up like this? There's nothing about the volume bar that's going to tell you anything any different than what the price is doing. I trade candlesticks and price action, support and resistance, chart patterns, and volume has very little to do with that on a swing trade. Very little to do with a swing trade. Boop, boop, boop. This chart. No, you can set this up in other charts as well. No, you can set this up in other charts as well. Just let me know. Is available, Chris? Yes, it is. Does it work with Thinkorswim? Yes, it does. Can I get detailed? If you email me, you can get detailed on the FLW. Do you find the 34 MA working better than the 20? You know, B, no, not necessarily. Not necessarily. The magic in trading is not the moving averages or the indicators you use. The magic is the consistency that you use it. Now, I'm going to close it out with, I don't know if this is going to be a positive note or is it going to be a negative note. I'm not sure. It's all how you take it. But, you know, if you go to webinars and if you go to webinars 5 years later and you're still going to webinars, and if you're still focusing on what the moving average is, you're missing the point to the total education side of things. I could put up the 40 instead of the 50 and do the same exact thing. I could use the T-line. Look, I'm the guy that created the T-line. I love it. You could do it with the 10 if you wanted. The magic is not the moving average or the indicator. The magic is the consistency that you use it. That's the trick. That's the secret. So the 20 or the 34, we're splitting hairs. You know, there's no difference. No difference at all. Do you use the RB trade on ETFs? Yeah, the very first chart I showed you was TZA. Very nice trade that we did on TZA. Closed out just recently. Yeah. When the 50 crosses the 200, it's no longer a rounded bottom breakout. It's no longer an RBB trade. It's completely different. It's a different trade. Totally different trade. Yeah. So this is without a doubt my favorite chart pattern there is, and I love to teach it to people. I love to teach it to people because they can see the rewards, and that just makes everybody feel good. I mean, let's face it. So, like I said, I'm offering. I will go out there and do whatever I can for you. You're going to have to get a hold of me. I can't get a hold of you. I don't know how to get a hold of anybody. So, hitandruncandlesticks.com. There's a contact us. You email me. I will get back with you. We'll make it happen. Time frame only determines length of time that trade. Yeah, you know, time frame is sort of a. You're looking for a swing trade. The question is, are you looking for say a 2% swing trade? If you are, well, get all over a 5-minute chart. You know, if you're looking for a 15% swing trade, that 5-minute chart's not going to do a doggone thing for you. That's the 8 exponential moving average. Aaron, 8 exponential. Yeah. You know, so if you're you know, if you, like I said, if you're looking for 20% trades, that 5-minute chart's not going to help you any which way from Sunday. It's not going to do anything for you. But if you're looking for 20% trades, you've got to get up into the daily charts, maybe a 2-day, 3-day chart even. You know, I do like the 4-hour. I use a 4-hour intraday, and I use a 2-hour intraday. Do you have examples of where RBB failed? You know, I thought there was one in here. Right here. Right here. It's a rounded bottom breakout right there. We rally up, and by the way, that's 11% trade right there. We pull back. Support doesn't work out so well. There's a failure. and here it becomes a rounded bottom breakout again, right here. Nice little pop up. Anyone know what that chart pattern is right there? And then there we go.
Okay, awesome. Rick,
All right.
can you hear me?
Yes, I can.
Oh, okay.
Thank you very much. I appreciate you having me on. I truly do. Thank you.
No problem. Great job. Really appreciate you coming in and spending some time with us.
You bet.
Getting a lot of really good feedback. See, I told you it was worth it, guys. Good crowd today, too. We got like 600 people right now.
Nice.
All right. We will see you at soon. Great job
Yeah.
today. You
Hey,
did that.
actually, we'll see you in Vegas here this week or this next week, Jeff. Take care.
Oh, that's right. Okay. See ya.
All right.
All right. Just real quickly, guys, I know there was a lot of questions on how to set up that in MetaStock. As it happens, I have my copy of MetaStock here. A lot of you guys were asking how to set up a 200 weighted moving average. Since it's going to take less than 2 seconds, I'm going to show you. So right here in your indicator quick list, you just find moving average. That's all you do. Drag it, drop it onto your price activity, go to 200, and then what you'll do is, he calls it a front weighted moving average. In MetaStock, it's just called a weighted moving average. Click on OK. That's it. Okay, let's get back onto it. We're already running a little bit late today, so let's go ahead and get our next presenter in here. Do want to, again, thank Stocks and Commodities Magazine for hosting the event today. They really appreciate it. They do a great job of advertising and helping us kind of get people into the room. It's a great magazine. I'm proud to be associated with them. And for any of you that are here that are interested in trying out MetaStock, the software that's been rated #1 in its price category every single year since like 1983, I think. I'm going to check, and I'll tell you about the next break, but I think it's every year, like every year since 1982 or 83. I'll have to double check on that and just let you know. You can actually get an extended trial if you go to metastock.com/tradersummit3for1. If you have any questions, we do have people that are here. You can give us a call at 800-882-3040.